Hi, my name's Phil. I like talking about politics, and in this video, I like to discuss how, although the Tories and Tory media got the early running on attacks against Labour's budget last week, they're being denied their main prize. They're going to have a bad day on Thursday, according to reports, because not only have the markets now adjusted to what Reeves announced, which made Liz Truss look even more ridiculous than usual, but the Bank of England are still expected to cut interest rates this week. Now, if they do, the Tory media are going to be stuck on Friday moaning about VAT on private schools again. But first, for daily political commentary, please click the subscribe button so you don't miss out. So, in the build-up to the election, one of Labour's main attack lines was how Liz Truss had sent interest rates racing and was costing people a fortune in extra mortgage payments. Now, interest rates were going to increase anyway, as inflation was rising at an alarming rate, although the Tories were still in charge of the economy at that time. But Truss's ill-advised mini-budget certainly sent them higher than would otherwise have been the case. So with Labour putting so much emphasis on interest rates, the Tory media will absolutely make certain that Labour have to stand by them as a metric of economic success. So if the Bank of England holds interest rates this Thursday, I strongly suspect that Friday's headlines will be all about how Reeves has derailed our recovering economy. You know, the same way they made a meal of the wobble in the gilt market last week. Oh my goodness, they cried. The yields have got up. What they didn't mention was that by the time the newspapers were hitting the doorstep, they'd gone back down again. The wobble in the markets could be easily explained by the fact that Reeves is borrowing more than they expected. Whenever anything happens that's not quite as investors expect, there's going to be a wobble in the markets. I said before the budget, reading various reports from outlets like the Financial Times in particular, but also The Economist and others, there seems to be an expectation that although Reeves could redefine debt in such a way as to give her actually about £50 billion worth of headroom, I mean, she wasn't going to use that, she'd probably use about 20 billion. That was the figure that was being bandied about. However, when she announced her budget, it was just over 30 billion. So that was significantly more than expected. And with any unexpected news, the markets do what they always do. They have a little bit of a panic. Then they decide to have a sit down, have a sandwich and look at the situation. If it really is something to panic about, they carry on panicking, right? Which is exactly what happened after Truss and Kwarteng's mini budget. And if not, they'll just stabilise again. And funnily enough, just before the weekend this was, so Liz Truss was confidently predicting that the pound would carry on falling thanks to Labour's budget. Oh yeah, it'll definitely carry on going down. Oh, you know what you're talking about, don't you, Liz? Yeah, I know what I'm talking about. It's definitely going to carry on going down. Then, no sooner had she said it, it was rising again. Still a penny lower than it was against the euro. It's the same as it was against the dollar. So basically, we now get a load of extra money to boost investment again and spending on public services, without any major meltdown in the markets. In fact, the view now expressed by serious financial papers is that investors have taken in Labour's plans and have gone, yeah, this is all right, actually. It's not what we expected, but this is fine. So the pound hasn't been sliding, much to the annoyance of the, once again, utterly humiliated Liz Truss and the Tories at large. So their next target is interest rates. So there's a meeting this Thursday. The Bank of England's Monetary Policy Committee is going to be discussing whether or not they put interest rates up, down, or leave them where they are. Tory journalists were presumably anticipating a wait-and-see attitude from the Bank of England because, you know, the OBR said in the budget that inflation is likely as a result of the budget to go up to about 2.6% and then come back down again later. So, yeah, they were thinking, oh, yeah, they'll probably hold interest rates then, won't they? You know, because inflation's going to go up. And as the vote is on Thursday, well, we obviously don't know exactly what's going to happen. It's not up to us. But the news is that people are confident that the rates are actually going to get a 0.25% cut. And if they do, it's going to completely ruin the day for economic writers for The Telegraph, right? Not only did the market stabilise, but interest rates will be coming down. This despite the fact that the OBR, as I say, have suggested that inflation is likely to rise slightly in the short term as a result of the extra spending in the budget. But according to reports in the Financial Times, the inflationary impact of the budget is being seen as minimal and not long lasting. And as the Bank of England are taking a long-term approach to inflation, there doesn't seem to be any belief that interest rate decisions should be based on expected small effects, which may happen for a short time. And if reports are to be believed, and interest rates are cut this week, it will mean that Labour will have been in power for a few months and have seen 2 interest rate cuts, in one after the budget including, when all interest rates ever did during the last 2 Tory Prime Ministers was go up or stay the same. Now, of course, we can know that interest rate decisions right now don't have a lot to do with the Labour government. They haven't actually implemented very much yet. They've just set things in motion. But political arguments have very little to do with validity or facts, don't they? And the picture is that the interest rates kept going up and up and up for several years under the Tories. Then Labour formed a government. Oh, look, they started falling. As long as they don't go up for a while, which will be more likely if Harris wins next week, please, then all the Tories will be able to do is pick on individual bits of the budget that they don't like. They'll have no ammunition for claiming that it's causing economic harm. Because if the Bank of England drop interest rates this week, it's like we'll have taken away their rattle. Come this Thursday, we may be learning that a week after the budget, the markets are fine with the extra borrowing for investment, and that the Bank of England thinks that inflation is under control. It won't stop the motor mouths in the Tory press from portending doom and gloom coming to the economy, of course. But seriously, what are they going to base it on? With a stable currency and falling interest rates. But there we are. Those are my thoughts. Let me know yours in the comments below. If you enjoyed the video, please click the like button. And if you'd like to support the channel further, you can join for memberships. Thanks for watching. And until next time, I'll see you later.